Peter McGuire, CEO of XM Australia. Why is oil not enjoying the same highfalutin elevation that every other market seems to be at? The NASDAQ and the Dow Jones. Dow Jones of 40,000 yesterday. My goodness. Silver and gold and everything else seems to be dancing along, and where oil is sort of stuck in the mud but happy.
Yeah, good morning, Sean. I tell you what, it's certainly when you run your eye across it, even look at copper, it's nearly 10,500. It's had an enormous rally to the upside in the last couple of months. Silver nearly $30, gold approaching 2,400 US dollars, coming under pressure. And that war premium certainly been stripped out as far as crude. All the hot air's come out of it, and I think it's probably oversold in a lot of ways. You're bouncing now at $80 or just under 80 for WTI. So I think it's probably going to see a little bit. It'll be now a move to the upside. I wouldn't be surprised to put a couple of bucks on by the end of the month. And you know, the US dollar's coming under pressure at 104.40, 104.50. There's probably further softness there. So they're talking, you know, you probably get a rate cut maybe in September. And as you said, equity markets are just on fire with the Dow where it is 40,000 and 52 or 5,300 for the S&P, strong as well. So yeah, it's been a time to be bullish on equities.
Peter, we're seeing a number of data points out of China today, which of course is ultimately the big pillar of marginal oil demand growth each year. China's factories up, but consumer down, property weakness continues. Your thoughts on where China's at in order to sort of get a sense of this fair oil price?
Well, Sean, you've got to look, if we look at first off, as we know, the property market's hemorrhaged and it's very anemic, and it's going to be a long time to work that through. You know, the talk going back about a year or so ago was 90 million uninhabited apartments and homes. So how long does that take to actually get absorbed through the market? There's the property sector. But the second part is internal demand. We understand the predicament. We've had fairly strong growth. If you're looking at like the CSI 300s, the best part of up, 10 to 14, 15% since Lunar New Year. So it's been an enormous rally to the upside for a lot of those Chinese equities. And that's a good sign. So you've got to say that's a positive. As far as energy prices, it's been probably very much, China would have to be rubbing their hands with glee in the sense that they're not paying $100 for a barrel, they're paying 80 from an import perspective. So that's a plus for them. Their base metal prices of finished goods and so on has got fairly strong demand. And when you're looking at the prices of copper and other metals, they've had a rally as well. So I think that'll be passed on to consumers. So probably China isn't looking too bad, but internal demand is the real issue, Sean. And that's where I think, from debt levels and the banking system, all of those factors are probably a little bit like, the emperor's no clothes. It's starting to understand what the true predicament is in China.
Peter, Australia has just kind of emerged from a trade war, or it's certainly a trade spat with China. What does all this mean, do you think, for, as Narendra mentioned, the implications for India? Where's Australia kind of caught in the middle here?
Well, in some ways, Sean, but I suppose, one of its great saving graces is that we're surrounded by ocean. We've got 26 million people, and we've got deep holes in the ground that give us some of the best ore, metals, diamonds, you name it. We can export it, and coal and uranium to the world. So we're very fortunate in that regard. And geopolitically, we're fairly muted. We've got wonderful agriculture, and we've got so many things.
Geopolitically, you're fairly muted.
Well, we are in a lot of ways, Sean. We're not.
If Washington D.C. calls up and says, move 3 yards to the left, I think you're pretty quick moving 3 yards to the left, right? I mean, ultimately, as Narendra points out here, this is getting increasingly to what team are you on, and can you dance down the middle still?
Yeah, well, yeah, we're very aligned with the US. We're very mindful of that, and so, but I was probably. Maybe not the word muted was the correct word, but we are in the sense where we're a long way from anywhere. That's probably one of the big saving graces. And
like America.
Yes, but America faces two, like Australia, it faces two oceans, but we're an island, whereas America has got it's got naturally from the south, and in some ways it's being invaded with the migrant issues that they've got at the moment, and of course Canada at the top. But we're really quite unique, and New Zealand is probably even more uniquer. Yeah, the fabric of our country is we're very prosperous and we're very fortunate that we've got such wonderful exports to really push into India, push into Asia, and of course China. And they've had insatiable appetites for the last 40 years. And by the looks of it, that will continue to a
Is
certain
there any
extent.
lesson? Is there any lesson learned that Australia can share with America at the moment, given that you've just been through a rather difficult wicket with China over your wine and all sorts of other
Yes,
bans?
barley. Yeah, barley and there was about 7 or 8 different commodities. I think it's just it's a process, Sean. Look, it's not an easy one, and I think that whilst we've been flogged a little bit, we're also very mindful that they're realizing that our products are world class, and that's been the benefit, I think, that's from an export model. And also, they're not the only game in town. There are many prosperous areas across Asia, like they used to buy mangoes from us and they used to buy great fruits from us, 30 and 40 years ago, and the price of them would be horrendous for rock melon or cantaloupe in Tokyo. We've got such wonderful fruit baskets that we can export pretty much anywhere across the globe. And so that's been a win for,
Diversification ultimately
yes, to an end
is a strength.
consumer.
Peter, the other driver of the markets in general, all the financial markets, but oil supportive as well, is this continued expectation that we will get rate cuts this year. Your thoughts on that still floating after the recent CPI numbers?
Well, Sean, they were in some ways better than expected. So there was softness there. So that was what probably has prompted naturally a little bit of a tick down for US dollar. They're talking about rate cuts. I think a little bit of further hot air will probably come out of the US dollar in the short term. It's been pushed back. There's about a 20% probability of anything happening in June. So it's pretty much very much off the table. They're saying now it'll be September. You've got also, I think, over this summer period, they've got a lot of heat starting to drive up with the debate series between Biden and Trump, how that's going to materialize, whether Biden's going to be dead man walking and they'll still have him there as president. His numbers aren't that strong. If they're going to see a change of batter, is that going to come in, before September? And is that shot in the arm going to be what the Fed probably does? And they can't do too much more than that, considering you've got, end of October, start of November, you've got an election. So that's where you run out of time. So that time premium, I think that's where it's at, Sean. One cut, 25 basis points, and everyone's saying it's done. So let's see and roll on into September.
Thank you. As always, great to have your insights and participation this morning. Narendra Taneja, India's leading energy expert, David Fife in Argus Media in the UK, and Peter McGuire, CEO, XM Australia, all the way over there in Sydney. Thank you, Peter. Thank you, David. Thank you, Narendra. Have a great weekend, everybody. All the best.